First, thank you all for tuning in, or if you're coming in later, I just want to remind everybody that today is a live stream. So once again, I'm calling in live from Calgary. You can see our clean room behind us, which you've seen before. We've got people in the room here with me, most importantly, Darrell. And so I'm going to just go ahead and turn it over to Darrell to kind of talk about it. What I want to let everybody know is that as we thought about today's live stream, we're just going to keep it as a casual conversation with all of you today. And there's a lot of questions that came in on the website. You can see them live there. Our teams are working hard to get all those answers. Darrell and I will try to answer some of those today as we talk through. But really what I wanted to talk about today is we spend a lot of time out marketing Exro since we've come into the new year. And Darrell's really heading all of that as our Chief Investment Officer. And so he really knows what shareholders want to know about us. And this live stream is all about increasing our transparency to you, our shareholders. So I've asked Darrell to kind of take a lead and let me know what everybody wants to talk about today. So welcome, and Darrell, it's all yours.
Thanks, Sue. And yeah, there's a lot of common themes. You see a lot of the common themes in the questions that showed up online. Those are public for anyone that wants to see them, so you can read through. You can see we're not shying away from any of the questions. Those themes were evident in the marketing that we've done. And to give you guys a sense of where we've been, Miami, Toronto, New York, Montreal, Boston, Texas, Arizona, California. So we're out there spreading the word of what we're doing, because this is a big year. This is the biggest year in Exro's history to date. You know, we're not looking at 2023 as just being, the year. We're building this company on your behalf for multiple years to come. And so we're really excited to be here, specifically based on the news release that we had out yesterday. And so I'm going to hit you right with that, Sue. Our new strategic partner that we did announce yesterday morning under NDA. What does this strategic partnership mean to Exro?
Yeah, this strategic partnership is a huge win for Exro. And while I know everybody's disappointed that it remains under NDA, we recognize that. We recognized it as we went into it. We recognized it as we came into today. It doesn't diminish what it is. And so I think a good place to start would be maybe talking about that MOU and what MOUs mean to Exro, how we define an MOU. So this NDA customer is one of the top 3 that we were actually looking for and talking to all of you about for several months. And so we're super excited that we've got it over this finish line and that we made this progress. This isn't a customer that we're just starting to talk to. This is somebody that we've been engaged with for multiple months. We've done MotorCAD engineering simulations. We've looked at how our drive applies. It's our existing high voltage drive, so we don't have to do any new development. This is about how we all talked for several years now about designing to manufacture and designing with scalability in mind and flexibility in mind. So this allows us to now go to multiple segments, to multiple markets, to go with, it's live, to go with the trends of the world. So how motors build and trend, we can go with that. But that doesn't just happen by putting the product up. There's a lot of software and tuning that you have to do to each and every motor that we work with. So for me, this motor partnership is exactly what we've been hoping for. The potential is huge.
Yeah.
I mean.
Yeah, and I'll add a few things to that. It's, we have been in conversations with this company. I won't say conversations, like pretty deep negotiations. The simulations that we've done have been our engineering teams and commercial teams engaged with this company's engineering teams and senior management. This is a strategy of electrification for a major customer. And so they're not going into this lightly. We're not going into it lightly. We have the full motor map, simulation in MotorCAD. So we've done extensive simulation. I think one of the questions that people have is, okay, what is the risk of moving from MOU to definitive? And what we can say is, before even announcing yesterday, we've done extensive simulations. And if you look at the history of what we've announced with Zero and other customers, and something that our CTO, Eric, probably prides himself on from his career, is his ability to simulate and then replicate the results in real time to within 3%. And so we already know going into this MOU what we're capable of from a simulation perspective, what the targets are to move to definitive agreement with this customer. And part of keeping them under NDA for now is that we want to do a splashy co-marketing. Let's come out. They're going to go to their customers, which are, if you walk around in any parking lot anywhere in the world, you're going to see the brand names of this partner's customers in there. So we're pretty excited about that.
Right. And I would say that for me, I'll kind of use what we talk about internally, and I'll kind of use what I've used. And I'm laughing because it's probably going to sound a little weird telling you, but I call it our slam dunk in slow motion. So it's exactly what we wanted, exactly what we were looking for. It's rolling out a little slower. But again, that doesn't diminish the weight of what we're doing with the partner. And so I'm going to stay positive about it. I'm going to stay excited about it. I wish you could be a fly on the wall and share that excitement with me, but we're doing our best to be as transparent as we can. The reality is we have regulation that we have to follow. We have things that we have to follow with a customer. And first and foremost, for all of you, our shareholders, but definitely for us, Josh, myself, the rest of the team, we want to make sure that our customers are taken care of. We want to make sure that we are protecting everything we can to build the best business that we can in the future. So if that means that customers want to keep under an NDA until they feel a little bit more comfortable with how we market together, I'm totally okay with that. Mm-hmm. So be excited with us because it's going to be a great, great future. And it's not that long. We're not talking about a 2-year development now. So again, we're talking about springtime, getting tuned up to that motor. And then, like Darrell said, going out to some customers that are pretty great and moving that to the next stage of a definitive agreement.
I want to hone in on the whole concept of a strategic partner. Mm-hmm. And we've been guiding to you, our shareholders and the owners of this company since summer of last year that, hey, we are in conversations with multiple strategic partners, tier one OEMs, very large companies. And what a strategic partner is to us is it's an opportunity to go into a customer or a partner for us and amplify our presence in the market. So we go in with products and then we're going out to their customers. So different than a co-development with some of our other customers, like a Vicinity and a C Electric. We've highlighted naming a strategic partner, which we did yesterday. Yes. However, because this is a motor partner, it's a different type of strategic partner. It is not a 2-year co-development like Linamar. So when you think of a motor partner as a strategic partner, are we done with just this one announcement?
I would say no. Again, they were one of about 3 that we were working with. We're pretty optimistic that there'll be more. I'm not going to put any timing out there right now. What I would say is we have to balance our capacity on our dyno to test. We have to balance our capacity with our engineering team, and we have to make sure that we're successful. We don't want to get projects that we're not successful with. But we have some more room right now. So we can keep continuing down the path and working with the other customers. There's no exclusivity here, so we can keep working. It's one of the biggest value props of our product is, motor company A will get a different value proposition than motor company B because the motors are driving a different performance spec for us. And so I think you're absolutely right. They amplify. We don't have to go push the doors of the brands that Ford and Volvo and GM and others. We have to work with motor partners and co-development partners to get in there. And we're doing that, and we're doing it successfully.
Mm-hmm. And I think another element of going with multiple motor partners is that they pull us into different market segments. So the NDA partner that we announced yesterday, big in the commercial electric bus market in Europe, and versus some of the other motor partners we're looking at, some of it is North America, some of it is South America. So it can pull us into multiple markets without us having to go amp up our commercial sales team, put a bigger burn on the organization. We're pulled in and using our standard products, just dialing it in with a different motor.
Right. That's a great point, Darrell. And it actually brings up, many of you know that I come from the motor industry side of it. So scaling up motor tech is different than scaling up drive tech. And so when you scale up motor tech, as you're thinking about your facilities, that tooling on the line fits a certain frame or a certain form factor for a motor. And so there is a world full of motor manufacturers that are supplying to all these different companies. It's not one that's supplying all of them. It's not like a drive where you can scale across. So I think that's another reason why we really see the advantage of amplifying our business through these strategic partners. And again, it's one of the partners we were looking at, so it's a slam dunk for us.
Love it. I'm going to stay on the concept of strategic partner here. Obviously, Linamar, a strategic partner. In October, we did announce a hybrid diesel application under NDA with a large European off-highway application. Point of clarification, that is not the European partner. That is a new partner that we announced yesterday. And we also have green tech renewables, which we just announced. Can you give an update there?
So I think that's a really great point, because those are three different types of strategic partners. But in the end, they're all amplifying our sales without increasing our burn. And so I think that's a really big piece. When I look to somebody like Linamar, we're very fortunate to have got in 2 years ago to be able to work with Linamar. And as Darrell said, that's a co-development where we're working into an axle program. And so, we've got to be highly confidential, but at the same time, we're very, very lucky to be working with a partner that sees the potential of the future of the tech and is working through those stages with us. And it's been a really positive partnership for us, I believe, both ways. And we maintain on track. We're looking to continue to have that progress, and we'll update you as we get that progress. But right now, everything's going exactly as we wanted. When we look to that other partner under NDA that we announced earlier last year, it was utilizing the same drive that we sent out to the Zero Motorcycle, Potentia, and other projects. Same exact drive that we're now changing the cooling and the voltage to go into a new application. So again, there's a little bit of development. They're in the development with us. Again, it's progressing exactly as we wanted it to. We are on schedule. We have customers coming out to visit us and do testing in the springtime. And, we're looking to having that come out of NDA in kind of late springish. And so when we look at that, it's worth it. It's worth it to go through that process and take that slow step to get all the way there. It doesn't change the outcome. It doesn't change the timing. It doesn't change how we do it. All that it changes is that instead of knowing the company is called X, that this is a $12 billion company, that we're working on one platform and they have several more that we can be working with. Mm-hmm. So it's been a great partnership for us. When we think to green tech, it's different. So first of all, green tech is on the cell driver side. So on our battery control or our battery energy stationary storage. With our go-to-market strategy is really about using partners that can be those feet on the ground and that have the energy storage expertise. So under Josh and Livio, we've been able to really sign a contract with one of the larger, if not the largest.
The largest, yeah.
In the Southwest. So there's 80 offices. In these 80 offices, there's people out selling commercial industrial energy storage units every single week. So the influx of inquiries is more than we possibly could have done on our own. Plus, these are partners that they know how to spec out that solar. They know how to install it. They know how to finance it. We're just the enabler. We're the differentiator to everything else that's on the market today. And you'll start to see case studies and different things on our website that help you to kind of see why would somebody choose us over another energy storage. But I can tell you, we signed that partnership. We're already working on our first quotes around our pilots. And so again, very strong for us and very much on track for us. And we look forward to delivering products in the coming months once we have our UL certification.
Excellent. I want to go a little, not that we're scripted, we are live, but I want to go a little off script and kind of run on something that you just highlighted about us being next generation tech. Mm-hmm. And when one of the questions that we get when we're marketing is, okay, who is your competition? How do you answer that question?
Right. I'm gonna use something from our CTO Eric, and I'm going to say, so, when we talk about it, we try to stay as normalized as we can in the business world. So you've probably even heard me talk about, we have competition according to the segment. So, on the high voltage drives, for example, we have Dana TM4 and we have Danfoss and we have others that are kind of the lead incumbents. But the reality is that's not our competition. We are not a standard 3-phase drive. Those that follow me on social know that I've posted about that. So our competition is the tech. Our competition is the fact that we are saying that there is a new way, there is a next generation of drives, and we're proving we can do it. This isn't about if we can do it anymore. Those days are behind us. This is about when our products go out the market. You'll get to see what I'm doing that for in a minute. When our products go out the market, when our customers start getting more miles on the road than we have today, when. That's all we're walking now and delivering the best quality product that we can that really sets the standard for the next stage of powertrain in the market.
And I'll add on to that. One of the reasons why we're under NDA and unable to name some of these partners is not because they don't want to be big companies seen as partnering with little Exro. We're more than punching above our weight class. But when you look at the, sorry, I lost my train of thought there.
So when you look at why they're not
right
with us?
When you look at why they're totally
that's
blank.
okay. I know where you're going with that
okay,
one.
you pick it up.
So it's not that they don't want to be partnered with somebody like Exro. It's that they have a current supply chain. They already have somebody that they're using that's a much bigger player than we are. So if they come and say they're going to start doing us in today's world where supply chain is a feat of nature to be able to manage, you don't want to lose those supply chain relationships until you're absolutely sure that your new supplier can supply. So we are not only proving our tech, but we're proving our entry point into that. These are all things that we've been working on for months. This is not things that keep us up at night at all. Yeah. Does that mean that it's easy? No. It's really hard. I was going to swear there. It's really hard. But they're all things that we've managed and that we're doing. So when we think about why a partner sticks under NDA, I would say it has nothing to do with wanting to announce the partnership and everything to do with how do we have the most successful progress and result at the end.
Yeah, thanks for picking it up. And it's kind of it's the way the industry is right now because supply chains have been such a concern. And again, it's a big reason why we built this facility on behalf of shareholders that we see is we are a North American supply chain solution for a lot of these players. And I'll point to an example a week ago with Bosch. Bosch is a very large company in the inverter space if you know them. They announced a new purchase order and couldn't even name their customer. And it is an existing customer that all they said was it is a large scale OEM. So when we see that, people are very cognizant of having names out there, having supply chains disrupted. So we're more than happy to go along behind closed doors with these partners. Again, our NDA partner yesterday, more than 25,000 employees worldwide. Our NDA partner from October, European based as well, more than $10 billion in revenue in 2022. And we're very excited about that. Yeah. So I'll segue then from the strategic into the start of production. So obviously this is a big year for us. We've been highlighting a start of production. When you think of start of production, what does that mean to you? How do you walk through a start of production?
Right. So for me, start of production means not only the ability to deliver the product to the customer as specified, obviously with quality and reliability, to deliver it on time, and to have somebody to deliver it to. So it kind of all comes into that full circle of a sales cycle. And so for us, it involves not only having the tech de-risked, like we've talked about, for those that haven't heard, we've always had a strategy to design for manufacture. I'm slipping off my chair. To design for manufacture. That means that we're thinking about series production. We're thinking about our path to profitability. We're thinking about our supply chain partners. And so there's a lot that we have to line up. And the durability on the product is what we're undergoing right now. That's why we can't pull our production up sooner. We can't just say, instead of Q3, we're going to start in Q2 because, hey, it's ready. And, we've got drives. No, we can't do that. We can produce samples. We can produce low volume. We can get out to customer. We can keep rolling. But that series production, that thing that gets you into hundreds, thousands, tens of thousands, hundreds of thousands, that comes with a whole bunch of back work that is, not me, people that are much smarter than me that are building up our facility, that are building up programming and commissioning, that are working with our supply chain. A drive has hundreds of parts in it, if not thousands of parts. It has a lot of parts in it. Obviously, the major is like a small list, but a small $2 part with a 40-week delivery could hold you up if you haven't thought about that early on. So that when I talk about we're ready for start of production, I mean that we sit around the room, an executive team of 8 to 10 people, and say, is there any risk to us hitting this production for this many units? And how do we manage that? And we do that regularly. So I feel fantastic about our start of production. Coming in, we're 2 months into the year. I still feel fantastic about it's a great start to the year, great start to our production. It's not going to be perfect. It's never going to be perfect. I don't make apologies for that, like you all know. But I think everything that's ahead of us right now, what we know we can manage and what we can control, we are, and we feel good. We feel really good about that.
And from an investor perspective and a shareholder perspective, what we're focused on doing in the quarters ahead is showing what the backlog of that facility is going to be, bringing partners out of NDA, bringing purchase orders backed by multi-year sales agreements. I'll speak a little bit to the numbers of the facility that we have here in the background. We've highlighted a capacity of 100,000 units per year. That's 100,000 coil driver assembled units when we're fully up and running here. If you take our low voltage drive, which is our A020 100 volt, with a motor, they go for around $1,500 a unit. If we took that 1,500 times 100,000 units and just did that low volume, that's $150 million of annualized revenue. We have an ability to expand to a 24-hour cycle here. So that's 300,000 units. So, 450 million, just our low voltage product. Our high voltage drives go for 10 times that cost. So as you're thinking about valuation of Exro and, okay, your pre-revenue, your 350 million market cap, yes, but we're 4 months away from the start of that revenue. And when you think about the nature of our contracts, the sales cycle might take a while. We have to spend more time on motors and getting integrated with the customers. But when we do, it's sticky. Like you are in their supply chain for 3 to 5 years of increasing volumes and steady delivery. So that's the stage we're at right now. So as a shareholder, what multiple do you put on a recurring revenue stream?
Yeah, and I think that's another area where the progress of the company is just a natural succession of building a company. I mean, we built something from an IP stage to a product that's in vehicles in 3 years. I mean, that's amazing. But I think the other side of it is as you're building that, it gets faster. So if we look at our own projects, I mean, we struggled through projects that went way too long. We're still struggling through some of those as we go to deliver. Those customers haven't walked away because it's normal. But as we look at the partnerships that we've got over the last year, you see that speed in production. You see that speed in the cycle. And that's going to get better as we look ahead, as we look to 2024, and we have, C Electrics and Vicinities running products on the road for 23. As we look to 24, now we have something to turn to for our new customers and say, there's the data points that you need. We don't need to go through that whole 9-month validation. So the cycle shortens a little bit. And we can see that with this partnership, again, that we've signed this week. Instead of a long multi-month to a year, what we're really waiting on is the motor to come in so that we can get on the dyno slot, so that we can test for the number of weeks that we need. And so it's a much, much shorter validation time for that initial test stage to get to the next stage. We still got to get it out on the road and all those normal things of business, but we're shortening that time. And I think that shows the progress we're making as a company.
Yeah, I agree. I'll flip us now to balance sheet. Obviously, we're a pre-revenue company. We're spending money to do all these things, transitioning to revenue here in the very near term. How do you feel as the CEO as we enter 2023 from a finance perspective?
Right. I feel fantastic. So first of all, it's my first live stream of the year. So thank you to the bankers that supported us in the raise that we did in December, to shareholders that have exercised on warrants that have kept us more financed as we come through this year, to shareholders that are out buying in the market. Thank you. It's been a great start to the year. Again, I'm not losing sleep on my balance sheet right now. I feel really good about the milestones that we have ahead and about our execution over the coming weeks with Everybody Knows brings more eyes. I think, like Darrell said, we've been hitting the circuit and we're very busy and we have a lot of people that want to see us. So I think we're in a good place to be, and it's on us now. It's on us to deliver for all of you. It's on us to execute for all of you. And outside of asking for a little bit of patience as we work through the normalcies of business, I would say this is probably one of the best starts to the year that we've had in a couple of years.
I agree. Yeah. As your chief investment officer, and like you're the CEO. You have to be 40,000 foot level, and then you have people like me that sort of fill in the slots underneath. So we started the year after closing a $15 million convertible debenture. So we started with obviously more than 15 million. We started with close to 18 million Canadian of cash on the balance sheet. I would say in the last 2 months, we've seen almost $7.5 million of warrants that are executed. So thank you to our shareholders on that front. I personally, as a banker, I don't like warrants when we're doing these deals. when you're doing them, it's obviously an incentive for risk capital that's coming into the firm as a pre-revenue company. So it's a bit of an incentive. But now we're seeing, the fruits of that as we look at our warrant structure. When we started the year, we had about 21 million warrants in total on the company from 3 previous financings that were done. If all of those warrants were to execute, it's almost $40 million of new capital that comes into the firm. So what we are focused on, I think they're exercisable at $1.37, $2, and $2.40 a share are the different strike prices on those warrants. So we feel very confident with our share price where it is right now. We want to continue the momentum, incentivize anyone that's out there that wants to exercise those warrants. That's a great thing for us because we think we're going to do really well with that money to continue to create value for you as shareholders. And so we're focused on backfilling some more news flow and catalysts to again add value to what we're building here. Finally, let's talk about progress. How do you feel about our progress over the last 6 months, where we are today, starting the year and the year in front of us?
Right. So I'll double up on the question. So I'll tell you, everybody always likes to know what I'm losing sleep on. So before we kind of go for a little walk, I'll do that too. So I think from a progress perspective, I would say, about 6 months ago is where, like you all know, we were kind of trying to get across the line. A lot of things that didn't cross as quickly as we wanted to as we came into Christmas. So it was a frustrating time for us, not a disappointing time, just frustrating because we want to be delivering better. We want to be delivering exactly as we say by the minute that we say, and that's just not life. I think as we came into the new year, for me and for everybody around, I think it's just been a whole new energy. And I think that everybody feels really great and things have been going really great. And again, it's not about perfection and it's not about everything going exactly as we planned, but everybody comfortable in their boots right now. So I would say, we've got awesome employees at Exro. And I think, everybody says that, or everybody should, as a CEO, think that way, or you've probably hired wrong. But I think for us in particular, we spend a lot of time on our culture. And when I think about something that keeps me up at night now, it's actually not all the things that you think about. All of that, I think we've got going on. It's more just making sure that our employees know how important they are to what we deliver every day, that our employees understand that building our shareholders' value is part of what we do. It's part of who we are as a company, and just having the time to communicate that. There's, somebody who told me once that, what you lose as you grow is really time. And that ability to be able to communicate with as many people as you can. And so we ran an employee survey, a net employee survey, right before the end of Christmas, and more than 96% of our employees rated us a place to work, rated us a place that they were inspired by our vision. And so it's really them that's here executing for us. So I think that as I think about progress, I look to our project. So, we're not going to go into the details of every single project today. We'll wait to the end of the quarter and let ourselves get there. But I would say everything's on track, like how we wanted. We've got things waiting to be commissioned. We've got trucks waiting to come in from Vicinity and some of the others. So there's a whole bunch of timing things that we're working, but nothing that is concerning us or that is changing anything in the outcome of it. We've got happy customers. We've got happy employees. We've got happy tech that's building its way to new homes. And so I think from a progress perspective, even we'll segue back to the start. As we think about this new NDA partner, think about HB4. And think about HB4 as the company that we announced in our shareholder update letter in January. And they're the company that we commissioned some vehicles with at the end of Christmas. Eric, our CTO, was out there with our commissioning team. They are the ones that were under NDA last year. And so they've come out of NDA. And not only have they come out of NDA, they've given us our first orders. This isn't about a huge, huge customer here. This is about showing the progress, paying our dues, getting out and getting credibility. Now we have to make sure, last time you saw a board, should we go for a walk?
Come with us.
All right, so it's live, so I'm going to walk a little slower. And I'm going to follow the rules because Simon, our CEO, is going to get really mad at me. So I'm going to put on the gloves. So last time I showed you a board that we ran off. These are drives for HB4. So customer that was under NDA, moved to a commissioning. It was a bumpy, longer road that we liked as we learned, delivering a product. This product is the same drive that we sent to multiple other customers, including EBTS. different motors that we match up with, not always the same motor. That's very customer dependent, but the same drive, no development. This is an actual production drive. These are first drives that we're in full drive that will go to customer, hence the gloves. Okay. So you can kind of see they're nice and light. They got an Exro logo on it. They've got full part numbers on it. And we couldn't be more proud of the team for getting these across the line for us and really starting what comes next. We have a lot on the go in the next 3 months, and we have a lot to do. And if I'm a little quiet, believe me, it's not because there's lack of things that are happening. It's not because my feet are up. It's the opposite. We've got employees to see. We've got customers to see. We've got suppliers to see. We got investors to see. And that takes up time. And so I'm focused on getting more drives out, on making us make money, on having a great product that really changes the way people think about power control. And we're going to see that in the market.
And I'll jump in on these just to give a little color. So
Don't touch
HB4, I'll try not to, Simon would kill me. So HB4 being a partner, a distributor, these drives, and these are some of the initial drives that are coming out, they are all going to different customers through HB4. So again, speaking to the scalability of where we can go with our tech, with the right partners, samples going into demonstration vehicles for these customers, an opportunity to potentially get purchase orders from multiple parties through HB4. And on the concept of progress, I would say from an investor perspective, we're making tremendous progress.
Yes.
We're adding and building credibility to what we're doing. We're opening up new doors as we move into start of revenue. Our expansion of funds that will look at stories like Exro expands exponentially. And so we are pounding the pavement day after day to spread the great work that all of our employees in our organization are doing to get this from literally paper a couple of years ago to being in customer vehicles and getting ready to launch commercialization here in the next few months. So it is a testament to the team that Sue has built. It's a testament to everybody that's here. We're bringing next generation technology. And this is not your standard 3-phase drive. So appreciate all of the patience, appreciate the support in making us one of the best performing stocks on the TSX over the last 6 months. We're not done. We're just getting started. We're keen to continue to add that value, bring customers out of NDA, in the weeks and months ahead. And we're like,
I'd say from a kind of final thank you all for joining us today. I think we have products that are ready. We have the right people that are here. We don't need to resource up right now. We're well resourced. People are here, happy, working hard. So thank you. Our dynos are working hard. And yes, we had some questions. They are fully operational. We have more than double the capacity now. We actually have a third dyno up and running. So they're full. To give you an idea, through the first half of this year, we are testing constantly. And so thank you very much for your support. Thank you very much to our strategic partner for coming on board, and to all of our existing partners that are with us today. We appreciate your confidence in our product, and we're going to deliver. And we'll talk to you all again soon. Thank you.